GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar where we cover some of the most interesting and most popular asset classes across financial markets. So looking specifically at Forex markets including euro, dollar, but we've also looked at commodities including gold and oil and Bitcoin and indices too. The S&P 500 is the most widely watched global index in the world, so that's what we have a look at. But any other indexes or other products you would like us to cover, please drop a comment in the video and we can make sure to cover those next time. Any other questions, again, please drop a comment or just click the like button. It really helps. Okay, so let's kick things off with the euro dollar. This is the daily candlestick chart, and you can see that basically we're still above our rising 50-day moving average. We're basically still in an uptrend. But as I had pointed out over the last couple of weeks, I think last week I had something like this as a rising channel. Now you can see that we've kind of spread out to this more like a rising wedge pattern. So I said last week that the rising channel is a bit unusual. It's not necessarily bearish, but what you normally like to see is a declining channel. Now we've got a wedge, and a rising wedge is actually a bearish topping pattern. So here's something we can look at. We've got some negative divergence here on the RSI. If we roll over again beneath this declining trend line on any next incline in the price, or if we don't even get much higher, we take out this RSI low and we break below this rising trend line at the bottom of the wedge. I think that's what we can use as our confirmation that we're going to see a bigger correction in the price. And to me, given that we've roughly been in a 17 to 19 range, I would look for 115 and that previous high. So I've mentioned that before, that the possibility of that sell-off, it hasn't materialized. The fact that we're now in a rising wedge pattern, and that this sell-off from Thursday, I believe that was I believe on the day of the ECB meeting, where the ECB were quite optimistic on their economic forecast for Europe. The euro rallied, banged into 119, but then I think we had some better US economic data, and it pretty much gave up the entire day's gains. So that's a little clue in the middle of this cluster of consolidation that actually a bit of weakness is creeping back into the euro. And obviously we've been eyeing the possibility of weakness because of this long-term declining trend line. Not necessarily sustained weakness, but just some sort of weakness, recognizing the fact we have been in a longer-term downtrend. So yeah, I still tend to think it looks like we can break this trend line, but we can't deny it's there, and it really should be some reason for a bit of a steeper sell-off than this. It might not happen, but a bit of evidence to me is stacking up that we get some euro weakness coming in here. So let's have a look at the pound. Well, we've certainly already seen the pound weakness. The euro is holding up relative to the dollar. The pound obviously has its own Brexit concerns, and actually the fact that the euro has been bid up against the pound has probably supported a little bit against the dollar. Actually, you'll note that euro pound is up at 5-month highs, the highest since March. But we had a pretty swift sell-off in sterling here, and we've basically, this is the daily candlestick chart, we've come into our peak from June. So, and you can see that we kind of stabilized there on Friday, and we're getting a little bit of an uplift here. I don't imagine that after a sell-off like this that we just bounce straight back to those highs. This to me is obviously a sustained period of weakness. We've taken out this kind of support area through here. And to me, you can kind of see that that's what's happened. We came down, broke straight through the support in massive weakness, couldn't rally at all, and just held those lows and just dropped straight down into the previous. Now what I've done is I've dropped down to a 1-hour chart, and I've drawn a Fibo. Let's get rid of that line there. Oh no, that's not what I wanted. Sometimes you end up selecting the wrong line in MetaTrader. But anyway, let's draw that Fibonacci in so you can see what I'm doing. This was just the last decline, and I tend to think in a market of weakness like this, probably you're not going to get much more than a 50% retracement of the latest leg down. So you can see that already down here, which looks like roughly the sort of 38% Fibbo retracement, we've already sold off twice in there. So we may not even get higher than these peaks, but if we do, you can see that it would actually take us back up to that old low there. Oh no, yeah. So the 50% retracement would pretty much be that low, and then we've got a little bit of space above it for this area of consolidation here on the downside. So I would look at this zone as a potential sell zone here on pound dollar, because I don't imagine after a big daily drop like that we can reverse that whole daily gain anytime soon. Having said that, this is a decent level for a potential bottom. So if you're minded to try and pick the bottom here, this is a potential area for it. I tend to think that is low probability trading. Probably a rally up into these here, and then you can target the low to be conservative, or potentially look to a move down closer to like 126, I believe, is where these previous peaks came in here. 120, more like 126.50 actually. So if you call that peak here 128, we could be looking at 150 pips to the downside at 126.50 if this level gives way. Of course, we've been on a general rise here. But given the steepness of this sell-off, I tend to think that you wouldn't want to just buy this without some sort of signs of the market strength coming back. So what happened on previous occasions? Well, actually on previous occasions, we at least saw a bit of a kind of mini low being put in. So say on this occasion we had a big sweep lower. Okay, so should we have bought the low there? Well, yes, in hindsight, yes, but what indication did we really have? Well, we did have 2 serious days of strength which took us out through these candlesticks, and then we pulled back again, then we rallied up again. So that's really your kind of classic characteristic of the trend changing: a higher high, higher low, then a higher high again. And at this stage, you're not in that kind of sweeping downtrend, and you are able to take it up to the previous peak. So then again on this occasion, we had a bit of a kind of downtrend line in place there, and at the bottom we had a 2 matching lows and higher close, which at the same time was a bullish engulfing candlestick. So that was a decent pattern here. Admittedly, a bullish engulfing here too. You can't always catch these things. That also would have looked okay to buy into, but actually we made another low. But then on this occasion you had a follow through, and then eventually to the top side. So you can sort of see that you can try and pick the bottoms here, but it tends to be that you want to see a little bit of a kind of confirmation. Even a rally up to here and then the drop back and then a new high up here was really the kind of first proper confirmation you had that this downtrend was over. So yeah, obviously there's pros and cons. Picking the bottom, you're going to get a better price. Waiting for the confirmation, you've got a bit more probability being on the right side of the market, but you'll tend to be buying higher or selling lower. Anyway, enough of all that. Let's move on to dollar yen. So still dealing with the same declining trend line as we've been dialing for a while. This is the daily chart. You've got our big declining channel, and then we've got this internal channel line, if you like. So let's just dig into the price action here. This is our support, which has held pretty well down at just a shade above 105. Looks like 105 is being defended. Even after that steep sell-off, we've got some buying into this zone of support. So then if we look at this bit of price action, banged into that same trend line that's been working for a while, hit it twice, and then you can see that we sold off. So if anyone, so that we saw that first sign of weakness from the trend line, then you had people kind of trying to sell the bounce down, and that worked because we never took out the old high, and then eventually we got that weakness, but it just didn't take us too far, and then we bounced straight back up again into close to this high, and then sold off again, but just couldn't really make any progress to the downside. Do keep making lower highs, but not really making any kind of big progress to the downside either. one little false break there, and then you can see this support is held twice. So what this spells out to me is that probably, given that this downside move couldn't sustain, we're probably looking at an upside break here. And that is obviously consistent with my idea that we're getting more weakness in euro dollar and pound dollar. We're getting some strength in dollar yen. Basically, I'm eyeing, the price action is telling me we've got some dollar strength coming in. That could of course be wrong, and I'm ready to readjust, but that's the premise with which I'm looking at these markets at the moment. I think a decent, given the fact that this trend line has worked pretty nicely, and even here you didn't get a close above it, you just had this kind of fake out move up to 107, it sold off again. So I think we'll just get a close above this this declining trend line, even on the 4-hour chart, not necessarily on the daily. That will be my confirmation to think that actually, yes, we are getting this breakout. And I would say that having sold off at 107 twice, we can probably make our way at least a bit higher to this this declining trend line, wherever the price should encounter it, maybe 107.20, which is 120 pips from current levels. If you're waiting for the breakout, it's probably closer to 90 to 100 pips on the upside. Okay, moving over to the Aussie. So similar deal. I think this rising trend line kind of captures the what's going on in the Aussie price pretty well. You know, you can see that we kind of it was a sort of resistance through. I think I've drawn this line before. It was a resistance through the action here. We broke above it. It's been support since. Now it's support, and so then it will just be a matter of when the it'll be a matter of whether the price breaks down through it substantially, and that should be a pretty decent sell signal, I think. First stop would be just a kind of parallel trend line through the lows here. Actually, we could probably do better than that, something like that. That would be probably a first step. We may see buying in there and the trend continue. But I suspect we get a dip through 0.70. But I think maybe if you're trading multiple lots and you are looking at selling here, the fact that we haven't made it through this 73 level, which is obviously a round number, we seem to be selling into it. Hasn't made it through a few times. If we do get a breakdown from here, target these areas first. And the fact that we made, after this sustained uptrend, look at all this period of rising channel, only at the start had we touched the 30 oversold level on the 4-hour chart, but now we just hit it again. To me, indicates that the trend had accelerated, and it got a pullback, and you would probably wanted it to rally up from there, but it didn't. It came back and decelerated back to that same mid-channel line again. So I suspect it has further to go on the downside. A close above the 73 level probably negates that idea. Okay, just looking at gold, it's obviously consolidating here, buying off the 1900 level, a bit above around 1910 has worked pretty well. 1, 2, 3, 4, 5-ish, 6-ish, probably 5-ish you could say. Decent trades to be had from buying off 1910. But every time we've made lower lows, we're in a triangle pattern essentially. What we need to see is a higher high made to break this triangle situation. So that'd be the first one. But then probably what we really want to see to see that kind of big trend change is actually a substantial move through this to tell us that we're now making higher highs. We had a false breakout through the triangle here, and then you can see that having connected that peak, and now these last two peaks are falling within it. In terms of my kind of dollar strength thesis, it feels to me like probably this is a reasonable risk to reward trade to the downside. If you have this as your kind of risk area up here, this is your potential reward area down to their lows. Seems like a straightforwardish trade. But as I say, if we do get a takeout through that high, then we'll probably need to test that high but still within here could be an opportunity just to sell the market down again from higher prices. And only once you get a trade through what is basically 2000, 1993, okay, 2000's up here, obviously that's the kind of mid of these prices, if you like. That's when we can start getting a bit more long-term bullish and buying dips and things. WTI, I've scrapped out my rising trend lines for now. We have declined. We've come into this, what I'd suggested last week when we were talking about the decline in crude was actually the previous low up here, which we did temporarily pause at, you can see, but we actually came down to the next low as well. Logic would have it that if we do decline again, then we're coming down from current levels around 37 down to this next low, which is more like 34.70, and then from there we've got this old peak here at 32 down to just above 30. It's obviously the round number big one. So the fact that we basically couldn't really get through 40, oil is a volatile market, you know, there is some logic to be said that actually for the fact that we failed at 40, that we actually come down to 30. The other round number idea is that we basically came up to 40, well, we didn't quite come to 45, but maybe we come down to 35 as a midpoint. But you know, the fact that we didn't make it to 45 to me tells us we haven't really gone from that round number to 35. That's not the range. It's more like 40 failed, so then potentially we move down to 30 and change. At the moment it's still a rising market, but obviously quite a decent sized dip here comparatively. You know, it's the biggest weekly drop we had since March actually. So another thing to look at is if we do get a bounce off current levels and we challenge that big 40 area, look for any potential reversals up near 40. Let's see how that puts. If we look at our kind of big latest decline, well, you can see that 40 coincides quite neatly with the 61.8% pullback of this last drop. So and then the 50 is this consolidation area here, and our short-term 20-period moving average on the 4-hour chart. Okay, and just have a look at Bitcoin here. So just drawing in some kind of the key levels. So 9,900 is these previous peaks through here, and we discussed this last week. We haven't really budged from there. That is that's the support, and obviously it's just below 10,000, kind of hence why. And you can see the top of this recent range where we peaked out a couple of times is between 10,400 and 10,500. So you know, the idea is that basically the market rallied up to above 12,000, reached around 12,400, but couldn't sustain the rally, dropped down to the previous low here. That could have been enough for the market to rally up over 12, but it struggled at the actual 12k number, and then when people got a sense as to what was going on, no, what was I saying? Okay, so then, but this support gave way, and obviously we tumbled all the way back, basically down to 10,000, but a little bit below 9,900, and we've rallied basically 500 pips up from there, 500 points, and that's our kind of basing point. So a move up through 10,500, and you can sort of think we're going to re-challenge this breakdown area up here. Conversely, this is our range that we're dealing with. This actually could end up being a kind of bear flag, and we break through 9,900. But at the moment, we're just in this trading range. Looks to me like we're about to break out to the top side, and in which case that's just really the market pulling back from 12k down to the old and retesting the big old 10k level before rallying again to the top side. So I think that's similar to what I said last week. Decent thesis with which to work with, that basically Bitcoin took out 10k, lost momentum at 12k, came tumbling right back to 10k again amid the kind of sell-off in stocks, but it's testing this area, ready to rally up again. Last but not least, pretty simple situation looking in the S&P 500. We've basically just got this rising trend line which started with this peak, and has connected quite neatly a series of lows here, including this last low. So I think if we get a close below this rising trend line, then things could start to get ugly pretty quickly. But what I suspect is that we probably do bounce from here. That this is just another correction, and that we're able to bounce higher in the trend. A good confirmation would that be this is a two matching highs, but it didn't have a lower close, so it's not a bearish pattern. So then you can have a bullish opportunity if the price breaks above these two matching highs here. These two here, if you get the price breakout above there, that could be an indication that we go up to re-challenge the record highs. Okay, I'm going to call it a day there. Thank you very much for attending, everyone. Good luck with trading this week, and make sure to subscribe to the channel so you don't miss these videos when they're released.